Hello everyone. Today we will talk about IR35, one of the most confusing tax rules in the UK. And if you work with UK clients through your own company as a freelancer, this video is for you. And we will understand what is IR35, who it applies to, how it affects your tax, and how to stay safe. Okay. So IR35 is a tax law made by the UK government in the year 2000. It was made to stop something called disguised employment. Now, you would say, what does that mean? So, some people work for a company just like an employee, same hours, same boss, and same work, but they get paid through their limited company to save tax. So, HMRC said, if you work like an employee, you must pay tax like an employee. That is what IR35 checks. Okay. So IR35 has two sides. One is inside IR35 and one is outside IR35. If you are inside IR35, you are treated like an employee. You must pay income tax and national insurance like a normal worker. You don't get company tax benefits. If you are outside I-35, you are real self-employed person. You can take profits as dividend and save some tax. Now, let's move forward and talk about its history. So, before 2021, the contractor decided if he wants to be inside or if he wants to outside I-35. But now, in most cases, who decides? In most cases, the client decides. If your client is a big company, they decide your I-35 status. If it's a small company, you still decide yourself. So always ask your client for an I-35 status letter before you start work. Now, HMRC check three main things to know your status, which is first, control, second, substitution, and third is mutuality of obligation. Now, control. Does your client tell you what to do, when to do, and how to do your work? If yes, inside I-35. Secondly, substitution. Can you send another person to do your job if you are not available? If yes, then outside I-35. Thirdly, mutual obligation. Now, what is mutuality of obligation? Is your client giving you regular work and expecting you to accept it? If yes, then inside I-35. These 3 points are very important. Now, let's take an example and let me show you a CES tool where you can check whether you are inside or outside I-35. Let me share my screen to the web browser. You can Google the term as CES tool, check the employment status. Now, start now, accept and continue, continue. Who are you, worker? And do you have or will there be a contract in place? Yes. Do you provide your services through limited company partnership or unincorporated business? Yes. Are you an office holder? Yes. These were our answers, and according to that, uh, we are inside IR35. So payroll working rules IR35 applies. So according to you answer the question asked by this tool, you will get whether you qualify for IR35 or you not, and at the end you can even download this letter from here only. Move forward. Let's take an example of IR35. Let me share you a screen for an example. So you will understand the tax difference and the accounting difference. So regarding IR35, let's take an example that Rahul is an IT consultant in the UK. He works full time for one client from their office Monday to Friday, 9 to 5. The client controls his work and he cannot send anyone else in his place. This means Rahul is inside IR35. Now, if Rahul works for different clients, chooses his own hours, and work for home, and can send another qualified person in his place, then he's outside IR35. Now, what is outside IR35? Rahul works as an IT contractor for a UK company. Let's assume that his contract money or agreement is £60,000 per year, and he works through his own limited company, RM Consultancy Limited. So case one is all about outside IR35, normal limited company case. Okay. So the client is paying 60,000, Rahul company receives full 60,000. Expenses allowable. He purchased laptop, software, travel, accountancy fees, and total expenses, supposing cut £3,000. Now, profit before tax would be 57,000, and our corporation tax is 25% would be this, and marginal relief would be 2895. You can even check this marginal relief at the HMRC website only. So your corporation tax payable would be 11,355 here. I have not considered AIA for laptop purchase, which we can include. And apart from that, your profit after tax would be 45,645 pound. Now Rahul can take this 45,645 as a dividend. Dividend have a lower tax rate, and dividend have a lower tax rate of 8.75%. So dividend tax would be around 3,950 pound, and a final take home would be 41,694 pound. Now let's talk if we are inside IR35. If IR35 applies, HMRC says Rahul company is just like an employee. So the client or Rahul's company, if a small client, must decide income tax and NI like a salary. So contract was of 60,000 pound. Employer NI would be 15%. The rates changed now, and at 60,000, employer NI would be 9,000, and it's an extra cost not paid to Rahul. So taxable salary would be 51,000. Now we will apply income tax and employee NI on it. First 12,570 pound would be the personal allowance. Later on, it will be taxed at 20%, which would be 38,000, which would be which we would left with 38,430, and at 20% for the first basic threshold 37,700 would be 7,540, and the remaining amount, it would be around 292 pound. Apart from that, we would be incurring employer NI as well of 3,030 pound. So our net take home from, if we are inside IR35, would be always lower comparative to company, and the flexibility will also differ a lot. Now let's look at the interpretation and comparison. So under IR35, a large chunk of your contract income is treated like a salary, deemed salary. So you lose advantage of dividend and lower corporate tax rule. And now employer NI is a cost borne by the company, which reduces what can be given as net salary. And after paying income tax plus employer NI, your net take home is much lower than you what have got if you are outside IR35. So that was it about IR35. If you like the video, do like it, share it, and subscribe the channel. See you in the next one, guys.